Beyonce and Jay-Z. I want to break down the house they purchased in Malibu. He paid $200 million for the house. They're going to spend $50 million on it. Let's assume they keep the house for 10 years. They're going to spend 0.005% for 10 years on property taxes. Maintenance, 1% of $200 million. He's got another $20 million in maintenance. Broker sale, when he goes to sell this asset, let's say he pays a flat 2% on the sale. 2% of $250 million would be $5 million in fees. What is the cost of money? If they pay cash, $250 million, and they could put that money over at a bank that I'm at right now and earn 0.05, they would earn $12.5 million every year. That's $125 million. For them to get to break even, they need to sell the house for a grand total of $312 million. That's a break even. This is why homes are bad investments. Twice a year I go broke because I don't want a bunch of this sitting around because it gets taxed.
Some crazy things you bought on December 31st.
2 helicopters. I bought a Gusta 139, went back and bought a second one. Those are $10 or $12 million helicopters. What I do is accumulate sums of money and I get rid of it. Those taxes, by the way, I'm not against, except for the fact that they only pay interest on the money being printed. So what I'm going to do is I'm going to get rid of this and buy machinery or buy buildings. And these buildings come with write-offs so that I can reduce my tax bill, which is the number one greatest expense any family has, is the IR and the S. Daughter Sabrina gets $667 a month. She's an employee of the company. She's required to do certain things, like stand up and say hello to everybody. She's paid one time a year, the 30 grand. The 30 grand then goes into Cardone Capital. Cardone Capital is a fund open for accredited and non-accredited investors. It goes by institutional quality real estate. That real estate pays her a check every month. She gets $667 a month. She can spend the 67. She can never touch the capital. Every year I add to the capital. She'll be a millionaire when she's 20 years old. So I get to write her salary off. Her income is not taxed because it's passive. The appreciation in the property will take care of her in the future, and I never have to pay for any of her bullshit. It's only one car you buy and the rest you lease. $150,000, Range Rover, it weighs 6,000 pounds. Section 179 IRS says anything over 6,000 pounds you can write off 100%. You could buy it on December 31st, write it off that year, even though you didn't even drive the car. Boom. $158,000 you get to write it off that day against your earned income if you have self-employment money or an LLC producing other income. I would pay cash for the Range Rover. We did. But the Cullinan that I have is a leased vehicle. I leased it with no money. I put it on a 24-month lease, never longer than that. Whatever the payment is, if you can't handle that payment, don't do it. And then every 24 months I trade that car in. Why do I do a lease rather than own? Because I can write off 100% of that lease payment every month against my business income.
Said that buying your home is a dumb idea. People think the reason you're saying that is because you own a bunch of rental property. You're trying to trick people into not owning anything so they can come rent with you.
Oh yeah, that's what I'm doing. Why not? I'm not trying to sell anybody anything. I'm trying to help people create financial freedom for themselves. There's not one report in the history of the world of anyone creating financial freedom because they bought a house. Jamie Dimon, he's on CNBC talking about how great the economy is. He's not thinking about people buying a house when he says that stuff. He's thinking about his rich friends. These people don't even talk about the house they bought. Donald Trump down the street, he don't buy one house. He buys the whole building and lives in it. Now, the everyday guy that's like, I can't do that, man. I can buy a little bit of the American dream by buying my house and one day it'll be paid off. People are making their biggest investment in their home when they should be making that same investment in themselves or an idea or a business that produces cash flow or real estate that produces cash flow.